What's going on, everyone? My name is Nicholas Merton here at Data Dash, and today is November 18th of 2018. Well, folks, I hope you all are having a wonderful day wherever you are. Today, it's time for a daily update here on the Data Dash channel, and as always, we're going to be taking a look at market valuations as well as doing some technical analysis on the market leaders. But outside of this as well, we've got a broad range of topics. I not only want to talk about the past few days of price action and where I think we're going over the next few days, but along with that as well, a very set of important news in regards to the SEC's narrative over ICOs and what it means for the overall longevity of ICOs in general. Outside of this as well, we're going to be talking about traditional markets, talk about the pattern shift that I'm seeing from the risk on to risk off narrative in equity markets, but also taking a closer look at actual indices and companies in the equity space, as well as taking a look at our good old commodities. So we've got lots of things to discuss. Let's not push it off any longer and dive right in to the update. So thankfully, over the past 24 hours, we've finally seen some green in cryptocurrency markets. I can't talk about how good that feels, and it's actually in some of the more well-established players. We can see Bitcoin's not only holding up quite nicely to stop the sell-side action, but we also see XRP holding up almost 8% for the day, as well as some players such as Ethereum, Stellar, EOS, and down to larger players as well like Cardano and Monero. However, I got to say, out of all players, not only have we seen green across the board here, but I got to give real serious credit to one that I've not always been a big fan of, and that is XRP. XRP has actually held up quite nice and has actually taken the second spot on market cap here over the past few days during the sell-off. Whereas other players have been selling off, XRP is not only up for the past 7 days, but has a decent amount of volume as well as market cap behind it. So got to give credit. In this bloodbath that we've seen in crypto, XRP has held up. So congrats to the bulls on that one. Now, before we continue diving in, guys, I just want to let you all know, for those of you who might not watch every single daily update, I am going to be attending MoonTech in 2018. It's in Estonia. If you guys can make it out, I'd love to see you there. It's going to be from November 26th to the 27th. I'm going to be doing a keynote there. Link down below for discounted tickets if you guys are interested on that. So diving into market cap here, we've gone back to our low volatility in cryptocurrency markets. And really, in the broader sense of things, guys, as much as things were very scary yesterday, this is not the type of valuation drop we've seen before. It didn't leave that much of a dent on overall market cap. But nonetheless, again, definitely keeping a little bit on edge here. I have not sold anything, guys. I'm still in the positions that I was before. In fact, I've actually added 2 times to Bitcoin. So I hope that lets you know about my general tone here. I like to buy low. I like to average down, especially in markets like this where things have been pushing sideways for a very long period of time. But again, I'm not getting fearful here. Not to mention, it's important to look here at market dominance for Bitcoin and notice how where in most cases where we see a sell-off in Bitcoin, we see a massive drop in dominance for altcoins. We have not seen that this time, folks. We've seen Bitcoin dominance making lower highs each and every time. And where have we seen this historically? We've seen this in the past with the double top on Bitcoin dominance back in December of 2017, as well as over here in January of 2017, the beginning of major rallies in altcoins across the board. So again, I'm not taking too much precaution at these levels. I'm being very patient here, and I've been adding to my Bitcoin positions ever since. So important enough to just share with you guys. Again, want to let you all know where I'm trading at the time. So I want to spend some time. We've got a few different things I want to talk about here because I'm not going to do too much crazy TA on altcoins. There's just not much to talk about in that regard. I want to spend some time to talk about the current price of Bitcoin and where I think it's going. And along with that as well, I want to spend some time to talk about 2 major topics, and that is what caused this, and also something that I think a lot of people think caused this drop, which was the hash war in the Bitcoin Cash community. I'm going to be sharing my opinion on that because I'm not doing a whole separate video on it, and I'll explain why. So first off, where do I think Bitcoin is going at this moment? Well, there's really 2 possible scenarios. I know it could go up or down, right? It's an old meme, but no, it's important to understand as a trader, guys, that there are scenarios where you can say that, I don't know where it's going to go. It could very well go up or down. And you can have certain plays that allow you to trade both ways. So what do I mean by this? Right now, we're starting to see a closing and a price action here. We're starting to see a squeeze on price. This has tended to be what you find in wedges, but this really isn't a perfect wedge for Bitcoin's price at the moment. It doesn't matter what exchange you look at. You have these kind of curved lines of support here, and I like to use this sometimes if wedges aren't available, and I've used this in FX markets and a lot of different areas. It's really helpful sometimes, especially when you have this kind of closing at a price that doesn't exactly correlate through a straight line. So now that we've got Bitcoin in such a narrow range of price, I really believe that it depends on whether or not we get a close above 5,700 or a close below 5,600. If we close above 5,700, we could very well see a continued breakout upward. But if prices turn back over and close below 5,600 today, we are very much going to see a retest at 5,000. I hate to say it, guys, as I take a look at the daily here, it's very likely, especially when you see this kind of candle pattern with the tightening in, where you have an upper wicks and the price is going lower. It's most likely that we're going to see this retest 5,000. And it might be good for the longer term of things. We might need to see a good test, a good 75% correction from the 20K highs on Bitcoin. But again, I'm not going to be speaking too soon on anything. We'll have to see. So now that we've gotten that out of the way, that's kind of my general strategy. It's very simple, generally just doing with price levels here. I want to spend some time to talk a little bit about this, what caused this, and then also talk about the hash war. So what really caused this, guys? Well, it's been 4 days since we did our live stream where, I'll be honest, at the time I didn't have any explanation, and outside of really what I proposed to everyone, so you guys might have seen the live stream and heard my rationalization for this, it sadly has not changed that much. You can take a look at a lot of different headlines out there. They'll say it was the hash war, it was, the SEC's recent actions on ICOs, which we'll talk about later on in this video. Guys, I gotta be fair with you all. They might play minuscule roles in this, but I can tell you what really most likely caused this was neither of the two. It was probably just simply whales who are trading on the spot market, which is very low volume. Take a good look here before the sell-off, and also right back to where we are right now, low volume. And it's them basically trading on the spot market on the basic Bitcoin exchanges and trading on margin on leveraged exchanges like BitMEX and Bitfinex. I mean, you guys don't have to look too far. There's a lot of pages out there that show the liquidated contracts on these major exchanges, and you could just see the amount of long contracts that were getting liquidated and the mass amount of shorts that were coming on board and making money on this dip. So it's important to understand that when you can trade with leverage on another exchange, when there's no regulatory framework and these exchanges are very global and separate with little to no oversight, people can make much more money pushing down the spot market or pushing it up and trading on margin on another exchange and having more leverage tied in regards to their trade. So this has been going on for months. It's the reason why we have the BART charts, and they're able to do this because we're in a very low volume market. Sometimes these can be even greater. Not to mention as well, there's another weighted factor, the fact that we not only broke a rising line of support here for Bitcoin's price, but outside of that as well, breaking on 6,000, a very big even that we had not broken really down below, outside of a few small times where we dropped maybe $50 or $100 below it, and then continued to rebound afterwards and close the day higher. So again, these were really the two factors that weighed it down. Now I want to spend some time, I don't want to ramble too much, but I want to spend some time to talk about the hash war. Notice how I don't have much headlines up. Notice how I'm not, going to be sharing my opinion on this. Guys, I want to be very clear and provide a real quick summary on the hash war. I've done a lot of research on it. I've been looking into the differences between Bitcoin SV and Bitcoin ABC. I've been looking into what not only Fake Satoshi or Craig Wright and Calvin Ayre are pushing for and who kind of has the upper hand in regards to hashing power and community support. I understand what's going on in this, and you don't have to look too far to understand really what's going on, but I can save you the time if you haven't, and I'd say don't waste your time on it, because you have continued petty arguments going on in the Bitcoin Cash camp between these two forks, and nothing productive is coming out of it. Both forks, I believe, are going to be worse off than they were beforehand. And what you end up having is one network that has a saturation of hashing power, but no one's using it because it's highly centralized. And then you've also got, in that case, that was Bitcoin SV, which is the Craig Wright camp. And you've also got the kind of Jihan Wu and Roger Ver side, which is Bitcoin ABC, which has much more network support, but in regards to miners, has lost a lot of its hashing power. So now the Bitcoin ABC network is even less secure than it was before. And then you've got a network that has a lot of hashing power that no one's using. So you pretty much end up with both forks entering into a war. And this is usually the tended argument with most real wars in life, that no one is better off afterwards. So again, it's this petty arguments. You have perpetual forks, and when you have perpetual forks, you're losing the one thing that makes Bitcoin valuable, which is hashing power. And it's the same reason you can turn to any argument that argues what's the real Bitcoin here, and whether that is the longest chain, the most hashing power, the majority of users, or in this case, what has the highest market value. Those four arguments all lead back to Bitcoin, BTC being the real Bitcoin. Doesn't matter what your opinion is on big blocks. I'm sorry to go on a rant, guys, but I'm tired of talking about it. I'm tired of giving these guys attention. They're simply trying to take advantage of the speculation in the cryptocurrency space and make money out of it. If they really cared about Bitcoin, I think they'd be trying to work on the protocol with the most hashing power, which is really what gives Bitcoin the value that it has. So Very important to take that into account. Sorry for my rant. I hope you guys agree with me. And I'm someone as well who doesn't really argue against bigger blocks and sees that there might be a value in having a hard fork on the network for that. But at the same time, we need to stick together. We need to stay on one network and really make Bitcoin the valuable player that it can be and stop making a joke out of all these forks. So going on, talking about jokes in the cryptocurrency space, let's talk about the craze in the ICO space and also what the SEC is doing in regards to the ICO space. Now, this was something that I think was well overdue and is very, very important to realize in regards to what the SEC is doing. So the SEC has cracked down on 2 ICO startups, Paragon and AirFox, and has actually set not only requests to give refunds to investors, but also to go about paying penalties. And most importantly, out of all of these, really the third factor here is that they established a lot of comments on these ICOs. And we'll learn about why this is important, because the SEC picked these 2 ICOs for a reason. And there's also, within this, there's an important reason, as I stated, as to why they picked these 2 ICOs. Because they were not only low-hanging fruit, they were obvious breaches of securities laws, such as Paragon Coin, which was a cannabis blockchain cryptocurrency, which used massive amounts of celebrity marketing. Really, it was basically a big marketing scheme to raise a lot of money. But outside of that as well, AirFox. And basically within these comments, they provided why they breached securities law. Well, this is something that the SEC does a lot. They basically pick out a few candidates that are a part of a massive financial trend that's either breaching securities law or breaking the law in some sort of way in financial markets. And the SEC basically comments on them, and they'll leave a framework of some sort that other ICOs can realize, okay, I can turn to this and see whether or not, crap, did we break securities law? Or, okay, no, we're all good. We didn't run a security. We ran a utility token or some other kind of token sale. So this is really what the SEC is doing here. They're picking 2 very, very clear, scammy, out-of-the-box projects that were massive marketing schemes that obviously didn't have their investors' interest at hand. And they're setting preliminary measures saying, hey, you guys can look at this, and if you broke securities law and you haven't contacted us yet, you better contact us, or that $250,000 penalty is coming your way, right? If you come to work with the SEC and do a lot of the work for them, or you simply refund your investors and take care of things yourself, in many cases, you'll be better off. And that's the whole narrative here. The SEC can't keep up with all these ICOs. So this is really what's going to happen. You're going to have a lot of ICOs reversing and paying back investors and handling all these things themselves, or you're going to see a lot of penalties coming their way and a lot of bankruptcies with a lot of these ICOs, especially with Ether's value going down as much as it has. So it's a very nasty situation here, something to take into account. And I'd honestly say that this is a little bit more worrying comparative to a Bitcoin Cash, hash war. I think this is something that would weigh down crypto markets more, especially Ether. That's going to be a big worry, especially with any drastic need to sell off a large amount. So keep an eye out for this. Very important to take into account. But it's important to know how this is going to change the narrative for a while. And it really sets clear that the party is truly over for ICOs. I really think we've reached peak mania and ICOs, guys. I talked about this back in July when I was in Lithuania, the kind of craze of showing the chart of the amount that was being raised. And with Telegram and EOS and so many of these large players raising hundreds of millions, if not billions of dollars in the process, it got too ridiculous when there was no stated clear amount of ownership, right? It's just simply tokens with questionable models and pure speculation. So again, guys, very similar to the startup world in this case, but even worse than the startup world, you have no ownership. So very, very concerning in that regard. Now, I want to spend some time to talk about the shift in equities markets, not only in the United States, but in the broader markets across the globe. Now, we've been talking about this pattern shift for a while. As many of you know, I've been bearish in 2018 with rising interest rates, with quantitative easing coming to a close. And then also, as we're seeing now towards the end of 2018, that stock buybacks, as they return back into the market, being the only thing that's really propping up these markets, we're seeing that they're not enough to sustain against the sell side action. So this is getting really, really concerning, guys. We're seeing, again, not just, in my opinion, a pattern shift, we're really seeing an actual shift in equity prices across the board in the indices. As we take a look here, I'll go ahead. We'll jump from Bitcoin here to take a look at the NASDAQ. NASDAQ is making lower highs here as we take a look at the daily. We hit a resistance point here. As we can see, a descending line of resistance. I'll go ahead and, I think, for some reason it got rid of my my lines here. That's interesting. But I'll go ahead and draw them real quick. We had general line of resistance here. And we've been also seeing generally a lower line of support here where prices are going lower and lower. So I would assume that you're going to probably get a pretty dramatic drop here back down to the lows here in February of 2018 quite soon on the NASDAQ. And this is going to come from not just simply a lot of small cap companies, like as we've seen with the Russell 2000, which has been taking a nice hit, but outside of that, you're going to see this in some of the well-established players, such as Apple. Apple has started to take a serious depletion and has started to step below its 200-day. And this has all really come in the past month, but really over the past 2 months. So I want to talk about why this is really key to understand when Apple is making these depletions. It proves two things. One, that stock buybacks for example, Apple has committed $100 billion over the next 2 to 3 years in stock buybacks for its stock. It is not keeping up against the sell side action. And second off, the important thing to note here with Apple is just how massive of a company it is and how it plays into this centralization of tech companies between the FANG stocks of Facebook, Amazon, Google, and Netflix. With these companies together, they make up a massive amount of the valuation and equities markets. And when Apple drops, say 10%, you're not getting a mere $5 billion, $10 billion drop in valuation. You're getting somewhere upwards of $80 to $100 billion in reduction of valuation. And that has a massive weight across the board on equities. That has a massive weight on the NASDAQ and other stocks. So when you start to see these massive tech companies that were the risk-on plays turning into a risk-off narrative, when you start to see gains being completely wiped out in a short period of time, and being very far away as well from the monthly moving averages, we historically see that Apple comes back down to the 50-month here. We've seen this well back in the history since back here in 2009. We've seen it right here, and right here. That means that Apple's most likely on its way somewhere between $140 to $150 by the time it makes contact. What does that mean? That means that we're going to probably see a $40 to $50 reduction in share price. That's well over 25% here, guys. And that's very concerning because Apple is a massive company. So then you have to think about the domino effect. What does that mean for Google? What does it mean for Amazon? That's already had a massive depletion in valuations here. I'll go ahead and play up the chart here. It's already below, last time I checked, below its 200-day. When you start to see these companies faltering and losing their momentum, what kind of tone does that set for the market? Whereas it usually used to hold on the 200-day. That used to be the buy, the dip moment, right? So when you're starting to see this, again, we saw the early warning signs months ago, guys, with Netflix. We saw it with Facebook. We talked about this for quite some time. When you're starting to see lower lows coming in, you start to see that the narrative for risk has been changed. It's turned off here. And even, God, there's been some bloody positions, guys, like NVIDIA. NVIDIA was a clear one. Take a look at the monthly here and tell me what this chart tells you. When 2 months of price action and not even I'll admit, not even a massive amount of sell side volume has really come in. But when you see this kind of price action where 2 months can clear out a year and a half worth of gains, what kind of tone does that set? I think it's becoming very, very clear, guys, that the risk-on narrative is ending in equity markets. And it's, again, why I've been talking about if you can play short positions if you want, guys, in equity markets. I don't think that's entirely a bad idea, but you got to determine that for yourself. I can't give you guys financial advice. I'm definitely considering playing some short plays in equity markets and picking up some dips on good fundamental companies, but it's why I'm sticking mostly to commodities and crypto. Going on to take a look at our commodities now that I've done a little bit of my rambling. Again, you can take a look at the majority of the indicators, guys. We're really starting to see a pattern shift. I like to see that gold is, again, making higher lows here ever since back here in August as equity markets have picked up the sell side action. That's really what you want to see here. Again, a rising line of support. It's becoming very clear that gold markets want to see a test above the 200-day. If you get up there, find support, and move higher, this could definitely mean that gold markets could be making larger moves for the long term here. Again, gold markets have been quite stagnant. And the time when you start to see retail investors giving up on commodity markets, those who have been invested since 2011, that's when I get eager. That's when I want to start investing. So going on, taking a look at silver, same picture here, looking like it's going to be a double bottom here on silver. I definitely want to see this hold for the next few weeks, but if we can get back up above $15 an ounce, I think this is going to really start to pick up and test some of the, not only the daily, but weekly moving averages. URA, however, is still my key target, guys. We're back into the wedge here. As I talked about, some people were worried that we broke below the wedge. We're back in it. Obviously, this is an equity-based ETF here, so because of that, you have a mix of companies, some that are not predominantly just in uranium, some that are more predominantly in uranium, and that's why you had, I think, a slight dip below. with the market sell-off. But it's a matter of this breaking up above the line of resistance, guys. I haven't entered into it yet, but I have got my money on standby. It's very easy to move between markets, and I'm going to be ready. And also along with that as well, guys, for those of you who are interested, I'm going to be doing my newsletter starting in December. So again, there's always a form down below if you guys want to register. But in the newsletter, I'm going to be talking about a few different uranium stocks that I'm currently looking at. I'm eyeing at the moment that have good TA as well as good fundamentals, at least in my opinion in that case. So if you guys are interested, definitely check out that. And, let me know if you guys are interested in kind of getting a perspective on outside of just crypto markets, but also in equity markets and commodities. I think uranium is going to be the play this year, guys. It's going to be very, very fascinating to see what happens. But again, I want to hear from you guys. Leave a comment down below. What do you think is going on in commodity markets and equity markets as well as crypto markets? I know it's been a bloody week. Seems like nothing's winning at the moment. Commodities are stagnant. Equities are on the downturn as well as crypto with its recent bloodbath this week. I want to hear what you guys are watching. What do you guys think is going on over the next few days or weeks? Leave it down in the comments down below. But until the next video, thank you all so much for watching, and I'll see you all in the next one. Stay tuned.